Hey there, everyone. Happy Monday. Hopefully, you had a great weekend and getting ready for the start of the week. So, first things first, going over the macro headlines for the market update. So, these are some headlines you may have seen in the news this past week. So, mortgage rates did dip below the 6%, but those dips can be sometimes short lived. So, they're already back up into the sixes as of this week. So, overall, the market is improving slowly. It's not going to flip overnight. We are kind of seeing a stabilizing market right now. It's not heating up kind of like we have seen in the past with lower interest rates, but we're also not seeing it crashing. So we're kind of seeing a stable market. So strategy rather than urgency is what we would be advising right now. It's just kind of like being strategic with your purchase, or looking at the market to see specifically when the best time would be to put your property on the market. It's all case by case, neighborhood by neighborhood. We're happy to break things down for you if you have any questions about your specific home or the area you're looking to purchase in. Affordability is improving fast when rates dip. I'll explain this a little bit more in depth and detail later on the slides. But I just want to kind of let you know that even if a small dip in the interest rates, you could be saving a significant amount over time. So I'll break that down a little bit at the end of this presentation. So next, talking specifically about sellers. So inventory growth is under 10% year over year, far lower than it was this time last spring. So it does help early sellers. So for example, if you go on the market right now, there'll be less inventory in the market, so you'll be competing against less amount of other homes. And this time of year, there's a lot of buyers on the market that are very serious and kind of prepared to make that offer than those kind of floaters that come around when there's a lot of inventory on the market, kind of looking, kind of see what the best property out there is there for them. So fewer listings means less competition than it would be in that peak spring market. If you would have asked me when the peak spring market would be, most likely, leading up to summer, around about, late part of March, April, May, and then the part of June would be that kind of peak spring kind of market where you see a lot of inventory hit the market. Going over buyers now. So we did see a rate dip last week. So having a lender or a real estate agent kind of break down the mortgage rates on a weekly basis, kind of keeping you top of mind, so that whenever you are looking to purchase, sometimes lenders can lock in a rate for you. So even if it does pick back up in the next week, you're locked into that lower rate. So it's good to kind of have that conversation with the lender and possibly lock in a lower rate whenever you do see those rates drop. So buyers who act early during the rate drops, often face less competition than those who wait for that big headlines to kind of hit the national news. So acting early always does help you out. But mortgage applications did jump up early January, so it's showing that buyers are quietly getting active again. So we're even seeing this in our personal business. Even myself, I've seen a lot of new clients, come out the woodwork and ready to make a purchase this coming 2026 year, which is awesome. Super excited about it, and I'm happy to help those buyers that I'm working with currently. But anyway, just want to let you guys know that the market is picking up a little bit, especially on the buying side. And then for builders and remodelers, so we are seeing a little bit of home sales kind of flatten out a little bit. It's meaning that buyers have a little bit more choices, and they're trying to negotiate a little bit harder on those kind of new builds. Prices on new construction are kind of under pressure, especially where there's a lot of similar product. Like I mentioned the previous weeks, especially like the townhome market here in Houston, we are seeing a lot of product out there, and the builders are trying their best to kind of move the inventory and kind of give up incentives and try to beat out the competition with adding different features, incentives, and amenities in their builds. So spec homes are selling a little bit better right now than customs. Due to buyers are a little bit more pay focused and kind of like trying to cost cut rather than going down that custom route. And obviously, the custom buyer is kind of that niche buyer who has a specific idea of what they want to do and how they want to go about designing their home. So talking about the inventory and activity. So inventory usually drops at the start of the year, which is normal with seasonality. A lot of people kind of go back into that mindset of starting a new year, focusing on what's coming up, looking at their goals, and then later in that later part of spring, then they're ready to take action. And also with schools and all that good stuff, people kind of are locked in until the end of the school year. So December was slower for contracts, but early January activity is improving already. So like I mentioned in that previous slide, especially on the buying side, we are seeing a little bit more activity come in for those serious buyers looking to purchase very soon. So many homeowners are choosing not to list, which is limiting supply and supports prices. So if you are a seller right now, there's less competition out there, and the less competition, the better for you, because the buyers have less to choose from, and also it kind of gives you a little bit more, strength to be able to kind of get the price that you're looking for. And then question, we get this a lot of the time from people that are kind of indecisive whenever they should buy or rent, and we kind of give it on a case-by-case situation of what the advice would be. So rents have kind of fallen nationally, making renting cheaper in the short term. So for example, if you are going to stay in a location for less than 1 to 2 years, obviously my suggestion would be for you to rent, due to the fact of closing costs, commissions, and all the added expenses it takes to own a home with taxes and everything included. So it kind of makes a little bit more sense if you're going to live short term to lease it out. But buying still makes sense for people planning to stay long term and build kind of that stability. So obviously, if you're going to be staying there, more than 2-3 years, I would recommend purchasing. And then a lot of first-time home buyers, they're kind of cost sensitive when it comes to the mortgage rates. So talking to a good lender, kind of letting them break it down for you, and then talking to us as your realtor, kind of breaking down, what that would that idea be. Are you staying long term? Are you staying short term? How long do you want to stay in that area, or are you looking to move, homes in a rapid pace? So it all depends on case by case situation. The last thing I wanted to talk about was going to be the kind of rates and economy. So like I mentioned before, mortgage rates don't move because one person or one announcement. They move based on how confident investors feel about the economy. So investors feel confident and calm, they buy bonds, which usually kind of helps the rates move down. When investors feel a little bit uncertain and kind of nervous, they sell the bonds, which pushes the rates back up. So like I mentioned before, a little small decrease in the interest rate. For example, if you had a $500,000 loan, let's just say the rates drop by 0.25%, that will save you $75 per month. And then 0.50%, which we did see a little bit more of a rate drop this last week, that could save you $150 per month. So over time, that could add up quickly, and it could help you in the long run. So having a good touch with the market will definitely help you that. So headline-driven drops are short, just like we saw last week. Dipped into the higher fives, and then quickly it moved back up to the lower sixes. So being fast definitely helps you with it within that window. So the reason that interest rates, keep from spiking is inflation is cooling a little bit. So which means rates are staying around about that low sixes instead of jumping back up to the sevens like we have seen in previous markets. But that is what is going on in the mortgage rate area. So hopefully you found this helpful. Like always, I'd love if you give me a quick message back or ask me any questions. I'm here to help you out in any way I can. But until then, I'll see you guys next week.